Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. But before we get into the charts, I want to take a moment to introduce you to somebody who you might not be as familiar with in the T3 Live community. His name is Mike Lombardo. He is the head trainer and the managing director of the T3 Live Platinum Development Program, which we will refer to in this video as the PDP program. Mike, I want to welcome you to the daily recap. Before we get into the daily recap, I want you to take a few moments to tell us a little bit about yourself, a little bit about your trading style, so the community can get to know you a little bit.
Sure. I started trading in 1997. I'm now entering into my 17th year as a trader.
Wow.
Yep. I started, I was at a firm with, same firm as like Mark Sperling, Evan Lazarus, Scott. We all started at a firm called Broadway. I was in a different office. I worked out of an office in Long Island. I was a product of the internet boom, and I've managed to carve out a career for myself after all these years. I think if I had to compare my trading style with someone that people are more familiar with, it's probably more along the lines of Mike Lee or Steve LeVay. I look for opportunities intraday. I'm more of a cash flow trader as opposed to a swing trader. And again, after all these years, I'm still doing it.
All right, we'll go over some charts here quickly, and then towards the end of the video, we'll have some more questions for Mike to get to know him a little bit better, introduce you to a webinar that we're going to be having next week where Mike's going to go more in depth about some of his strategies and the PDP program that I referenced earlier. But now we'll go take a look at the market. The S&P today was weak early but closed strong, rebounded, showed resilience, sort of a microcosm of what we've seen this year and this year plus in the market. We can go ahead and take a look at the chart of the S&P. We saw some weakness in the morning, as you can see by that tail if we zoom in a little bit more. But like I said, the market was able to bounce back, close positive thanks to a nice afternoon push. So it's still game on for this rally, and obviously nothing's changed. Mike, do you have any other thoughts on what you saw in the market today overall?
No, this market is so resilient. We're hanging in there. After a 150-point rally up in the S&P, we've had a really shallow retracement. And the trend is your friend. Until it changes otherwise, you have to keep riding this wave up.
One of the things Mike talks about often is, and one thing he focuses on heavily, is trading high beta tech stocks. When you're a short-term trader, an active trader, you look for stocks that have movement, that if you're skilled, you can potentially take points out of big swings in stocks. And obviously, Amazon is one of the most high-profile, high beta names out there. Amazon was big in the news last night after its earnings report. Delivered what looked like a mediocre report. They swung to a loss when they were expected to make 5 cents a share. And it seems like every earnings season, Amazon gets a pass. Last night you had the steady stream of people saying, oh, was this report bad enough that Amazon is going to bounce and this and that? And then lo and behold, today it opened down a few bucks and ripped through highs. We go and take a look at the chart of Amazon here. I can show you. Amazon, boom. I mean, you have, like I said, that chorus of people saying, oh, this is the end for Amazon. They finally jumped the shark, and they're finally headed for that big correction. And what do? You get a rip to all-time highs in Amazon. And this just goes to show you that price action is king. While understanding fundamentals and stuff like that is important, as a short-term trader especially, it's important to obey the price action and not pay so much attention to the noise. And I'm sure, Mike, you can shed some more light on that.
It's a favorite of many traders here at T3. The stock is made of Teflon. It just, like you said, it gets a free pass. It doesn't matter what they report. And price action is king. Until this thing actually breaks down and start showing weakness, again, this is one you definitely do not want to be on the wrong side of Amazon.
And then there's another stock that's been in the headlines recently. It didn't report last night, but I think it's worth touching on prominently today. Is Facebook, and Mike and I were talking about it earlier, is that Facebook, since it IPO'd, has not really been a huge favorite of short-term cash flow type traders because you really haven't gotten much commitment to any moves to Facebook, and it's been sort of hard to peg down, both from a fundamental side. The company has had problems, and then the stock, like I said, maybe the float is too large, or bankers mispriced the IPO, whatever. For whatever reason, the company has not gotten any traction, but that earnings report we had 2 nights ago looks like it might have changed the game on Facebook. And it was interesting to hear Mike's perspective on this, that Facebook could start to become more of a favored stock and more of a headline stock for momentum cash flow short-term type traders.
Yeah, think back to last year, right? Apple was the stock of 2012, at least for the first half. And then in the second half of the year, towards September or so, Apple completely broke down. And as we're ending the first half of this year, you might have a similar scenario with Facebook taking a more leadership role within the tech sector. So you constantly want to be on top of any kind of change, a fundamental change, a change in leadership. It happened with the home builders and the banks. The home builders now in a rising interest rate environment have taken a little bit of a breather here. The banks have taken a more leadership role, and within the tech sector, Facebook could become the stock in the second half of the year where as goes Facebook, so does the market. Similar to what Apple did very much for the greater part of 2012.
It's good to hear those insights from a different perspective than I have. Another stock like Expedia had earnings last night, broke down really hard. We'll take a look at the chart of Expedia just so you get a visual of how far it did come down last night. And like I talked about in this morning's morning call, when I was looking at the chart, the number that it was opening at wasn't even on my chart. It opened at $50, went all the way down, closed at $47.20. Huge down move. We have to zoom way out to even get some perspective on that move. And look at the monthly chart. I mean, to see a bar like that on a monthly chart, the result of 1 day of price action. I mean, that's a huge move. And a question I had for Mike as we were getting ready to step in for this video is, something like Expedia, a short-term trader. Obviously, they're taking most of their positions intraday. They're not taking a lot of stuff overnight. Is Expedia the type of stock that you're going to be looking to buy and trade quickly, or what's the criteria on a stock like this? What's going to compel you to get involved in something like this?
When a stock breaks down, like Expedia did, it needs a lot of. You're going to give it a little bit of time for it to set up and give you some good intraday swings. In order to buy this on a longer time frame right now, I think you really have to let this thing base. It's one that you want to just keep on the radar. It will give you a couple of swings. Perhaps if it's down 3, 4, 5 days in a row, it can give you maybe a 80-20 reversal or an outside reversal day. But until that happens, right now it's just something you just want to maybe keep on the radar, but not actively be involved in, especially from the long side when the stock breaks down this heavily.
In a non-earnings related stock that especially pertains to short-term traders and talking about high beta stocks, and it's actually something that Mike's going to go more into depth on in next week's webinar, which we'll get to in a little bit, is Tesla. Tesla today had another big move. Yesterday in the virtual trading floor, Mark Sperling was highlighting it as his favorite setup. I know Mark's been a little bit under the weather, so he wasn't on the radio as much, but he was typing in the chat, and someone asked him, they said, what's your favorite setup going into tomorrow? He said Tesla, and that seems to be a common favorite setup for a lot of traders right now because Tesla has been moving tremendously. We're going to take a look at the chart before we do more analysis and hear from Mike on that. You see Tesla, another gap up today. Didn't have a ton of movement during the session, but I think there were still ways to identify things in Tesla intraday today as well as benefiting if you were sitting overnight long. Mike, I know Tesla, like I talked about, high beta stock sort of fits the profile of what a lot of short-term guys like to focus on. Has this been a focus for you?
Absolutely. Tesla is a favorite among many traders here at T3. I love when stocks, I love when Goldman puts out an $80 price target one week and then Deutsche Bank comes out and puts out a $150 price target the week after. You have a lot of bears and bulls that are going at it in this name. It creates a lot of volatility, a lot of opportunity for traders to take advantage. And if you know what to look for, know what to watch, you could really profit in a stock like Tesla.
All right, so now we've gone over a few stocks. Overall, it was a quiet session like I talked about. The market was resilient, but now I want to take an opportunity to go in more depth with Mike about his trading style, the webinar that we're going to have next week, and with the PDP program. So like I talked about, the Platinum Development Program, the PDP program is a program we have here at T3 Live that some of you guys might not be as familiar with, but we have various courses that we offer here, from the Swing Trader course to the Active Trader course. But the PDP course in particular is geared towards shorter-term traders and people who really want to become full-time traders and maybe full-time professional traders. And Mike will give you a little bit more color about that. But Mike, just tell us a little bit more about the program, the content, the length of the program, and the type of stuff that you'd learn if you were to enroll in the program.
I like using a math analogy to describe the philosophy of the program. Let's say you were taking a math class and you've never taken any math before, and the first class you would ever take is calculus. I think you would agree that the odds of having success in that class would be a little bit slim.
I even took all the maths up to calculus, and I didn't even enjoy calculus.
And you still struggled, right? So exactly. But what if I said to you, okay, rather than taking calculus, let's take a little bit of arithmetic, let's learn arithmetic, let's do a little geometry, do a little algebra, and then 6 months from now, we'll tackle calculus. I think you'd have a better chance of having some success. And that's essentially the philosophy of the program. It aims to teach aspiring traders or individuals aspiring to become traders the essential basics or the building blocks needed to become successful. It's a 3-week course. It's taught here in our offices in New York. The first week is really the basic stuff, the nuts and bolts. The second week is more, we get into more technicals. The third week we cover topics such as psychology and money management. There's one day where we talk about algorithmic trading. I bring in one of the partners of the firm who's one of the top algorithmic traders in the country. He comes in and gives a lecture. And it really just sets up the trader to focus on learning the basics. That's the classroom portion of it. As soon as the class is over after the 3-week course, you enter into a mentoring program, which continues throughout your tenure at T3, and it gives a trader some structure where they're more, rather than just coming in and being on their own, you'll have the opportunity to bounce ideas off of other people, and I believe it gives a trader a better chance of having success.
Yeah, I mean, I let Mike do a lot of the explanation of the program, but I've also been around the program, gone through it, helped create it with Mike's help and the help of a lot of people around here. And one thing we talk about a lot with trading is that trading is a skill. It's not something that you read a textbook, you watch a video. I think that one of our commercials that we run sometimes in our video, Evan goes over this concept, but it takes time to learn, and it takes screen time, it takes reflection, it takes a lot of hands-on guidance from people who have walked down the path and who have potentially had success going down the path. And one thing the PDP program does is not only are you in-house in New York in our training rooms and getting hands-on guidance from someone like Mike who has 17 years of experience, but you're also, while you're applying what you've learned, you're getting feedback, you're getting guidance, you're getting coaching, like I said, from someone with a ton of experience who has experienced the highs and lows, all that type of stuff. I think that's the real value in this program. Going more into the topic of the webinar is titled Trading Google, Netflix, and Tesla, I believe, and the theme is how to trade high beta stocks the right way. Why is beta and volatility so important to you? Because I've seen different traders like to gravitate towards different type of stocks. I've seen some traders who say, I don't want to mess with all those high-priced, high-volatility stocks. I'd rather trade patterns and lower volatility stocks, safer stocks. That's just more my cup of tea. Why do you believe that trading those volatile high beta names is the right way to go for a short-term trader?
Well, first off, trading high beta is certainly not for everyone. The reason why I gravitate to it and why some of the top traders at T3 gravitate to the high betas is because, in the article, people ask the question, why do people rob banks? Essentially, that's where the money is. That's why traders enjoy or gravitate towards high beta stock. There's so much volatility, there's so much more opportunity in them, and that's where the really good money could be made. I'm not suggesting that you can't trade a lower beta stock or a market stock. You could have success doing that as well, but in those names, you probably have a greater opportunity to make a great deal more money.
One of the themes that I know you're going to talk about in the webinar is the idea of using intraday relative strength. And this is just one topic that's covered during part of one day of the PDP program, but I think it's a very simple lesson that's important for people to learn is the concept of relative strength, especially intraday relative strength and the way it can be applied. Relative strength can be applied on multiple time frames, but Mike uses it often intraday, and there was a good example today. There's examples every day, but Tesla, a name we already talked about. I don't know if we can get the charts up side by side, but we can pull up a short-term chart of Tesla here, and Mike can talk you through what we saw there. So if we'll go to the 13-minute chart, one of our Fibonacci time frames, and look at Tesla this morning. Let's go to our East Coast time template so we get a better view of it. There we go. So basically what we saw, and I'll let Mike take it away here in a second, this morning is the market was down a little bit and saw a sharp sell-off in the morning, and then as you can see in the morning in Tesla, it was a little bit of a different story.
Yeah, at around 10 o'clock this morning, the market retraced, pulled back, and Tesla started coming in as well, but then it held. And the market continued selling off from between 10 and 11 o'clock. What should Tesla have done? Tesla should have continued selling off. But that's when the stock based and consolidated, and that is a perfect setup for an intraday relative strength play. And shortly thereafter, when the market started rallying back up, that's when Tesla made a move back up. Now, it didn't fail to make new highs on the day, but certainly gave you a very calculated entry with minimal risk and the opportunity to make good money in trading a name such as Tesla.
Yeah, if you go look at the chart again, you can see Tesla here, just to give you a little bit of a visual. We can't do it side by side, but you have this pulling in the morning, as you see. We'll go to the same time frame on the spider chart to show you what he's talking about.
Right.
So in the morning, the market was flat, sharp decline. And that's around here, like you said.
Yep, that's when Tesla held up. Is right when the market started declining. That's when Tesla started held up around right around 127ish. Held that area, and shortly thereafter, again, you can tell the market double bottomed, went forward, and Tesla rallied up to its almost near its highs.
All right, and going back to the title of the webinar, it's how to trade high beta stocks the right way. So I saw that title and I was curious. You know, we talked a little bit about what the right way is. What are some of the wrong things that you see a lot of people do, maybe some more untrained eyes do when trying to trade high beta names?
Well, the wrong way to trade high beta is to jump into these names without any sort of game plan, without any kind of strategy, not looking at any kind of charts, just trying to pick spots randomly. That's the surefire way to get your face ripped off. That is what the last thing you want to be doing when you want to be trading, when you're trading these high beta names. The right way is to be patient, to wait for really good setups, similar to what a Tesla did, and then use a technical indicator, whatever it may be, to enter into it. My favorite is using relative strength. That's what I've been doing all these years, and that's going to be the focus of the webinar. And also, it's a core component of the PDP.
Yeah, I mean, I think a big thing to understand about high beta stocks, and I would caution you in this regard, is that they're a land of opportunity, but they're also a land of incredible risk. And we use the analogy in a chart or in an article that Mike posted this week about why do you rob banks, and the analogy that we used within that article was, you know, if you're a surfer, you don't immediately start surfing and you go out to Mavericks in Northern California and you jump on there, because you're not going to be able to ride the wave, and more than likely you're going to drown. And it's the same thing with high beta stocks. It's a process of becoming educated, becoming skilled. You definitely don't start trading Tesla in size early on in your trading career. It's a process that you build yourself up over time, and you know, if you're going to trade high beta stocks and take that type of risk, you need to be educated. You need to learn those skills in a professional environment. So that's that.
I totally agree, John.
And the last question that we'll wrap up with here before we let you go for the weekend is, next Thursday from 4:30 to 5:30, I imagine it's going to be a beautiful day in New York City. You could go to happy hour. You could go spend some time with your family. You could go play a twilight round of golf. You could do any number of things.
Go to Central Park.
You go to Central Park. Love Central Park.
Sure. Yeah.
Why should you sit down for an hour from 4:30 to 5:30 next Thursday in front of Mike Lombardo to hear this webinar, to attend this webinar?
Look, I truly believe that if you tune in next week, it could be a turning point in your trading career. It is such, understanding relative strength on an intraday basis, it's such a simple yet essential way to finding good trades, where if you are a trader who's having a little bit of success, it could be a turning point where you could go from having a little bit of success to a great deal of success. And it's free.
You got nothing to lose.
What's wrong with free?
Absolutely nothing.
Right, exactly. So there you go.
So next Thursday, 4:30, webinar with Mike Lombardo. I promise you it'll be very educational. I've learned a ton from him. He's gotten more and more involved with T3 Live education. You know, we try to get the best guys, the most intelligent, most successful people to become part of the T3 Live training team. And that's what we've done with Mike Lombardo, and his course is outstanding. The feedback we've gotten on it has been so great that we decided to publicize it a little bit more and give people access to it a little bit more. So I think this is a tremendous opportunity to learn something for free from Mike, potentially learn a little bit more about the course to see if it might be a good fit for you. But this has been John Darsie, your Editor-in-Chief, and Mike Lombardo of the PDP program here for the Daily Recap. Everyone have a good weekend.